Good morning. It is 7 o'clock Friday morning. We have from 8 o'clock today Eastern to 9:30 with you guys. Just a quick couple of things before we go. We had a little technical difficulty. We got all the panelists back in the room, so that's a good thing. I'm going to read a couple of disclaimers. Then I'm going to also put down in the chat right now, if you are part of the group and you're seeing this, I want to open your chat box up. And I just put in a Telegram channel for Hawkeye. So if you guys need, we're going to post some wedge setup, how we draw things, some extra help that you guys might want when you're doing wedge trading. That'll be there for you guys to use at your convenience. And let's go ahead and read the disclaimer so you guys can get started. As dogs are barking in the background, trading foreign exchange on our margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Just so you guys know that this room is for educational and collaboration purposes only. We will not be giving you any sort of financial advice or any sort of recommendation. Should we happen to take a trade, whether it be in live or demo, that is not any sort of recommendation or suggestion that you should do the same. Follow your trade plan. Make sure that you're going according to what you see is best for you. Before trading live, make sure you have a written trade plan that kind of identifies your entries, your targets, your exits, and how you're going to be managing the trade while you're in the trade. If you would, while we're here at this, could you put in the chat box, how many years have you been trading Forex? Just type it in the chat box. If you have not been a year yet, then put 0. I want to see what our experience level is, because our first section of this meeting this morning will be basics and slowing things down. We'll make sure we're hitting everybody. So see, 1 year for Andrew. Okay, I've got a newbie, a couple newbies. Okay, cool, very cool. That kind of gives Al and myself and Matt a framework to work within. If everybody had 3 or 4 years experience, then we would probably just jump right in. So let me go ahead and stop sharing. Y'all can see my screen, I'm hoping. I'm going to go ahead and stop sharing. Al, you ready to share yet?
I am.
All
Good
right,
morning, everybody. How's everybody doing this morning? I just want to say, if anybody, especially the new folks, I'm going to try and keep this as simple and slow as I can. If I start going too fast, just put something in the chat box and let me know. Say maybe you could slow down a little bit, or if I'm going too slow, say, oh, this is really getting kind of draggy. But I'm going to try and keep things simple. It was mentioned yesterday about the different indicators that we use. And I'm going to just start off with showing as much of just the basic price action analysis that we work with to maybe help give you an idea. I said most of the indicators that we use is mostly just for enhancing probability of winning trades, enhancing probability of targets, and things like that. But the main part is the technical analysis of just the price action and the patterns that the prices are starting to form. The most important indicator, and I can't stress this enough, the most important indicator is that BTE indicator that everybody has. You already have it right now, but you have to make the settings, and that's that indicator between your ears. You can be as very good with technicals, you can be very good with money management, but unless you can get control of the emotional aspect of trading, it's very difficult to become profitable, even with the best of systems. So my job here, and one of my goals here, is to help everybody train your brains to understand the limitations about what the market has to offer, and for you to be able to program that indicator of yours to what fits for you. Yours is going to be different than mine. Mine's going to be different than Matt's and Brian's. But I can't stress how important it is to get that fear and greed control in your trading, and you will be successful if you can manage to do that. And everybody struggles with it. Even I still struggle with it. And you'll see, if you look at some of the charts, that my graphs, that you'll see the days where I struggled. Most days are usually pretty good, but just don't. Just keep aware of that's a real major factor. So having said that, the last
And
direction.
I put up some news items that we will want to be aware of here shortly. CAD and a little bit of US, just so
Oh,
everybody can
okay,
see
yeah, let me put
the
that,
news.
let me poke those up here. Today is Thursday, July, or
Actually,
Friday.
Friday.
Right, we're Friday.
And
More. Let's see if I can go. Here we go. Friday. We have a couple of red folders, a Canadian dollar on at 8:30 today, so we're going to be aware of that. So if we have a CAD alert around 8:30, we may just pass on taking that trade. If it comes out, we'll look at it, but I probably won't take it unless there's something so obvious I can't stop it. But that's not one we're going to be looking at. The last alert that we had was at 3:15.
I'm gonna stop sharing my screen now. You
Oh,
want to share
because
yours?
I'm not sharing, am I?
I'm sharing my news so they can see it.
Okay, okay, good. Okay, I'm going to, let's see, share, let's see, host to say, oh, you need to give me sharing, right, sir, Brian?
Okay, you should be good to go.
Let's try it again. Nope, not yet.
Now try.
There we go. That's better.
Sorry, my bad.
That's all right. We're still getting used to this new format and new platform. It's there is a little bit of a learning curve here. Okay, so anyway, right now the last alert that we showed was at 3:15 this morning, East Coast time, New Zealand, US. It was ascending, and I've got it set up here. Right now, I've got it in the replay mode because I want to show you everybody how we set it up, what I was thinking of, what I was doing when the alert came out. I didn't take this trade because I was still in bed at 3:30 this morning, but this is where the alert came in at the yellow line. And what I'm pretty much doing, it was ascending, which means this thing was going to be going in the from the low to the high direction. And the main thing I look to see where's the last pivot high, where's the most significant pivot low before the alert happened. And so this was the high. And if I started my A up here, that would be descending. So I'm going to start my A down at the lower part. And this is the lowest low that I had prior to, from the last high. This is the highest low that we've had. So I'm going to start it right about on this candle right there. So I'm going to take my tool, if I can find mine, and it's the triangle pattern. And I'm going to put my A here, and I'm going to put my B back here because I'm looking for the, see where the trend is. And if you look to see where my C is, it was ascending. So I'm trying to find a candle that's going to be a little bit higher than where the A was. And this was the less significant candle that's a little bit high. You can see it's pretty much flat. And if I go all the way over here to my D here, you can see it's already broken the wedge before the alert. So I'm going to have to take it to this part before the alert. That's about the best I can do. I like to see another hit between the B and the D line, but this is about as best I can go. And then I'm going to go to my 5-minute chart. And I'm going to be readjusting these points. Like I said, you can see this, if you look, you can see that this AC line is just this is pretty much right in level. So this is a flat line. Here's about the best I can do for the upper wedge on the 5-minute chart. And I'm going to do the same thing again on the 1-minute chart. I'm going to move this over just a little bit, just to get as close as I can. Move my C over here as close as I can. And my alert was right here pretty much where I started. And I would come back here and check where my A is. Actually, my A was right, where is it? There to go. It's not, I'm in the replay mode. That's why it's not backtracking, but it's all the way over. It's up there. We'll call that good. These replay modes do have some limitations. So with that, we're going to start. I'm going to put my vertical line where the alert came out. That was a 3:15. Let's see if I can do this. If I can get this thing to play here. And you see right now, here's where you can actually see where there's actually a little bit of a trend coming right down on this area. This is inside the wedge. This was not tradable at this point because unless you saw this right here, but this is the main wedge that I'm looking at up in the top. Now, if you were real aggressive and real quick when the alert came out, you may have been able to catch this, but you have had been almost right there at the time. to be able to catch that move. And from here to the top of where your wedge is, you're looking at about 4 pips. So this is basically almost like the entry zone that we would normally be drawing if you were to try to clone that and move it up 2 pips. You may be able to maybe catch it, but that's been pretty aggressive, pretty quick, and the odds of getting everything drawn in that within that 30-second of time, you almost have to be here in order to be able to catch that. So anyway, we're looking at the top wedge here. This is what we're really looking at. And we're looking at 2 pips above. And so I'm going to mark that's 57, move this to 59, right about there. And we're going to see if this candle comes up into this area, test the 2 pip break off the top of the wedge, come back, retest the wedge, and then take off to a higher ground. Right now it's still forming, it's still laying inside the wedge. And you can see if you had taken that, you would already been, now this is a significant wedge. If it comes back and retests this, if you were looking for an earlier entry, which generally we try not to do that right off bat because we want to wait for it to actually break the wedge. But if I were actually able to put this D all the way down here, you can see where this would have been an area of, and there's, again, is only like 3 pips away. So that's one reason why I decided to keep my D up here. Okay, here's the break. Here's the blue candle that went right to the wedge. It stopped, broke the wedge. Now we're looking to see if we can get in somewhere between into this green channel and this the green and this orange channel. I'm going to mark this as being a entry to buy. So this is the zone we're looking to buy. Now we're going to see if it's going to give us a chance to get in. Not yet. There's a red candle. And that was a nice little test of, and I'm not sure if we're going to be able to get into this one or not. It's pretty much off to the races already. This has been one you have had been very aggressive. When you got this red candle, when this big candle pulled down and couldn't close, you could have tried to get in here, but the problem with that would be, is you've already left the channel. Here's where the channel, here's where you would have been in. Let's say you got in right here. Let's say you got in off of this candle, or even if you were lucky enough to maybe get this pullback, you're already 3 pips down the road. So if it retraces, you're already going to be, well, if you're looking at a 7 pip target, you're halfway to your target already. Now the question is it going to come back and give you a chance to get in? And I do not know the answer to this.
Remember, this is entering on a 1-minute chart. If you happen to want to slow things down, you can wait for retracement back on the 5-minute, which is kind of what this is doing. Just
right.
so
now
you guys, if you want to slow it down a bit.
This was a nice little candle. Now it hasn't touched the top of it. You can almost use the top of this 2-minute bar to, it's still as the high range of where the break is. So it's still possible you still might be able to get into this thing. I would be looking at where this candle broke here. I would be looking at maybe using, if you're wanting to take the extra risk, if you're risking from the 50, 65, 60 area down to the wedge, you're looking at 4 pips. So if you got in, you'd already have a 4 pip risk if it comes down, touches checks out your wedge. But you also know that the high here is at 64. So right now you basically have 4 pips up and 4 pips down. So you're right about in the middle between the range where it broke out. And so if you have gotten in right here, right at the very top, you have just barely gotten your 7 pips. Now you're coming back down into this area to see if you can get a retest. What I would be looking at, if I were looking to try and get into this trade and looking to see where my, let me see if I can get a chart up here. If I can look and see where my strength is down here on the US dollar. Right now the US dollar is stronger. So we're just basically we're in the pullback. Let's go to the next candle. Let me bring this up a little bit.
And we'll explain what all those indicators are that we're seeing on this chart here in a bit.
Yeah. Now we just had a nice little, here it dropped, it based a little bit, it's dropped again. Now we got a blue candle. Now, right now you have a choice. Do I want to take the shot at this And then again, this is where experience comes in, where your own personal trade plan comes in. Some people say, nope, I'm not going to take it. Or they say, this is a range that I'm willing to accept 60 to 57. There's a 3-pip range, but knowing that if you were to do a stop, your stop would have to be, if you want your 7-pip stop, it's going to be right down in this area. And so I'm going to put a visual stop here. Stop zone. So if you decide to get in at this, right where it is right now, you'd have your stop down here, but it would be back into the wedge. So basically, if this thing comes back all the way into the wedge, you may want to get stopped. You may want to take your stop out first. Now, but I would be looking at this particular case. I would be looking at my stop being somewhere around. If it came back down and broke, if it came back into this region right here, I'd be looking to get out my trade. But I would still make sure that as long as it respected and didn't close below the wedge. But this thing's getting lower and lower and lower as we go along. But I would probably be okay with, I would probably be willing to take a shot if it broke and get a buy stop at this level. And I'd be willing to take this risk because I'm well below the top of the wedge. And if it comes back down, breaks the wedge, I'll probably be out before I lose my second. But this looks like they have had some nice strength. Being
Notice
this on
too, Al, if you can just slide your screen back a little bit, your D,
right,
where it was once resistance, is also the point behind it. It's also the same height, pretty much
right where it was.
That height, and then one next to you. 2
And
points of resistance. Look to your left.
To this one here.
Boom and boom. Notice where we're hesitating at. Many times when you see lines of what was once resistance now becomes demand, and that's where current price is at.
And you can see this zone right now is it moved your target a little bit up above off the wedge, but now this was yeah, exactly, and that's a good point there, Brian, that you pointed that out. And you even have this one right here is where this candle got broken by the D. So this is an area where it's significantly it had some trouble before. And if I put my well, you know, we could be able to use that tool there. So anyway, I've been willing to take this. I'd have my stop down here, but if this starts breaking this area, I'll be out of this trade with a short loss. But it gives me a chance to get in. I see where this hook. Well, I see. Maybe move this, change this out a little bit. You can see where this is our indicators that we're using to help define some of these moves. You can see that the 8 it barely broke out. They're both hooking up, and that tells me this is a pullback. And now I got my flip where now the US dollar is still showing stronger because you're on the 1-minute chart, but that's not unusual. Still waiting, so we're still in it. Okay, and right, we get a buy stop. Okay, right there I would be in it. Because I'm trying to have I'd either do a market order while it was in there, or I'd do a buy stop, either one. Because if it kept on going down with the buy stop, you wouldn't have gotten filled, so that would have been good. But right now you'll be filled. And with that, you're looking to see where your 7 pips are, and right where it is right now, here's where your 7 pip target would be, up in this area. Right, just a little bit lower. I'll use this as a target 1. And that's because just a little, depending on what your fill is, you say you got filled at 60, 50, 65, 61. 8 pips going to be 68, which is going to be right there. I just say that's where you got filled. That would be your target. You're in the trade. Still take a little bit of heat. Now all my moving averages are moving in the right direction. You may catch a little bit of heat right here at this 30-minute 62, which you see it has some heat right there. Came up, couldn't close above it. Still couldn't close above it. Now, right now, you're up in the trade from here to here. You're 4 pips into it, almost 5 pips profit. You make a choice. Do I want to take my 5 pips or I want to shoot for the 7 pips? Again, that's a personal choice. How lucky do you feel? Are you willing to have it go all the way back here if you're wrong? And I'm looking at the strength of it. I've got a nice spread here. The New Zealand dollar is 5 points stronger. I would be going for the gusto here. Still, now this thing's backing off a little bit. We're coming up closer. Now the question is, do we have our 5 pips or 7 pips? So you got in here. You're right at 6.5. If I see this thing struggle a little bit, I would be out of this trade. And right about this time, I would have been hesitant about maybe getting out of it, but right there's your 7 pips. I may have taken my profit a little bit earlier just because I saw this struggling right here. And that was your trade for the day. I'll play it on out. Comes right back down to that zone. And it keeps on going.
I love that. You made it so simple. One of the things that we like to aim for is not really what works, but what is duplicatable and what you can do over and over again every day. That's really simple and not time consuming. And that's how you can have more consistency in your trading. At least that's how I've found. When I can do something that's not rocket science, just looking for a break at a lower time frame, it's a real game changer.
And if you got in if you're up at 3:30 or 3:15 in the morning, it would have taken you basically 2 hours and 7 minutes to get your target. Well, actually, it would have taken even less than that because you got your first target right up here. You have been in that trade for basically 1 hour. In 1 hour, you're done for the day. If you wanted to go for some more, you can come back in, maybe take another opportunity to try it again. Again, you don't know if this thing is going to keep on holding. And in 2 hours, you've had your target the second time. So basically, these are like 1 hour candles to your targets. And once you get your 2%, say you just got your daily bread and go back to bed or go and have depending on what time zone you're in, you go and have an afternoon or evening. But that's the way. But a lot of these trades, again, it's the early morning trades and sometimes these middle of the night trades are the ones that seem to work out the best. The ones in the evening from from 6 o'clock East Coast time till midnight, you'll find some good trades, but oftentimes you don't have the volatility till somewhere around 11 o'clock midnight in the middle of the night when Asia's in full swing. But that's the way that one played out. So let's see, let me check the chat here.
You have a question. Can you please go over this strategy again? I followed the last session as well, but I still don't grasp the strategy. So what I'm guessing is we get the alert from Airis, take it from basics, completely clear your screen out. Don't even do the moving averages or anything. Hide them all. And since you already know what's done, you can go back to your time and just hide everything. And then go through, show the wedge on your alert. You get your alert screen up.
Okay, let me go to the, let me put it on a 5-minute here. So we have it was a 3:15.
I mean, obviously, if you're using Airis, you got to get the alert first. And that comes in your back office or on your Telegram. You can have push notifications to your phone, anything like that. So what it basically is a wedge is drawn. You get an announcement from Auvoria Prime's Airis, and you draw the wedge out. And he'll go, depending on what it is, ascending or descending wedge. That's all given to you already. All the technical analysis is already done for you. All you have to do is draw the wedge, get a clear picture. If the picture's clear, then have an entry, exit, and trade management strategy in place before you ever get in. And we can show you the mechanics of, that's what Al is doing. Al is showing you the mechanics of actually drawing the wedges, and then you guys have to make the determination whether this makes the type of trade makes sense to you. Because sometimes you can draw a wedge and it's ugly, and it just, you force it, it's not right, it doesn't look
too
well.
steep. Could be too steep. You could try to cut candles. candle bodies, you try to avoid cutting candle bodies, because in other strategies it would be permissible, but here, because we want to go down to a lower time frame, if you then cut a candle body at a 15-minute level, you're then potentially cutting price at the 1 minute and the 5 minute. And because we want to have that specific entry, we can't have it cut those candles before the alert.
And if you see these blue vertical lines, these are basically what they call the session breaks. This is basically all the trading that happened the day before. Here's where they closes. They balance your books for about a half hour or so, and then you start the next day's session. And so when I draw the wedges, these wedges alerts come based on a 15-minute chart. So I try and stay either with no further back than the previous day's low or the previous day's high. In this case, you're actually able to pretty much right here. As you see where the session from the close of one day to the opening, you see how it's in a very narrow range right here. So you have to take that into consideration. There's not a lot of volume during this period of time. But once that new day opens, here the volume starts kicking in. So that would be a low. This would be and this was the previous high of the day before. And the wedge was, they said it was an ascending wedge, which means it's going from the low to the high. So when I start drawing it, I'm just looking at the lowest pivot point after the new day as best I can, which was here. And so that's where I'm going to start drawing my wedge. And if you just take just a straight trend line, you're basically taking from a trend line from there to the next. You want to try and have it says ascending, it's got a slight upward trend or flat, either way. And you can see where if I put it right here, where this vertical line was drawn, which is where the alert was. This blue candle was not, when this alert came out, that blue candle was not there. It stopped, the alert was based on everything prior to that blue candle. So that would be this red candle here. So, I mean, you could go and you could take it all the way up to right to the bottom of that red candle. You do have a little bit of a breach of a wick right here, but that would be acceptable. I view that breach to be acceptable. But since it's such a, I kind of like to see what's going to happen with the next candle. But I mean, there's nothing wrong with taking to there, but it still gives you an ascending. You have a little bit of a breach, which a lot of times you look for one breach before on the trend line. So that'll be the bottom, the bottom. Then the top, I'm just looking to see where it makes sense to draw another trend line. And so if you look at, this is all the area where it was basing, it was just all flat after the new day. I would start probably from this candle right here. If I can get this thing to draw.
And it takes just a lot of practice to draw the, I mean, it's not, the mechanics of this strategy are not hard.
And I'm looking to see,
drawing different.
Right, and I'm looking to see where's that trend line. You can see over here, it's already broken this trend line before the alert. So, but since I can't really, you want to make sure that you have, I try to get an anchor hit here, which it didn't quite hit, but it's only about 1 pip away. So that's close enough. And then I can take it. So this is really where I'm drawing the wedge. And so once it breaks, but if you go down to a 5-minute chart and fine tune it, you'll see that you have your little breach there, close enough. This candle, this was the first candle that actually broke it within 5 minutes after the alert. It had the alert, the candle where the alert was did not break this wedge, but it was 5:10. After 15 minutes is where this one broke right here. If you go to your 1-minute chart, and again, you'd have to have been right on top of it in order to be able to catch that. And
like Matt said, we're going for precise entries. Every little pip is going to make a very big difference.
So exactly, and so it can just tweak that just to the very top there, and you see with this candle right here came right up to the wedge. It didn't break it. This one did. That would be where I would be looking at the possible breach of the trend. It came back down into the area to retest the main wedge, which is this bottom green line. Let me see if I can even put a line here, early buy zone.
And Lucas, we'll get to those indicators here in a moment. We do have a new Airis alert, Al, just
okay.
now.
All right. We'll get back to this one here. Let's see what we have.
Probably gold.
Probably gold.
I'm just kidding.
It's a type of break, Brian.
Trade gold though, guys. So we don't trade gold with this. We get enough alerts. We get more alerts than we can actually trade with Airis. So you know what? If gold's your thing, go. But
it's U.S. Swiss. Okay,
US
so
Swiss
what
at
we want to do is
8:30.
first
Okay.
and foremost, we want to make sure we know what side of the trade Ruben's going to be on and do the absolute opposite.
Oh no, I'm going with Ruben today.
I don't know. I'm going with Ruben. Too bad.
If he says short, I'm going long.
Okay, so let's see. This is our U.S. Swiss descending wedge at 8:30. So we're going to just come over here to our U.S. Swiss chart. I'll move this over here so I know that's my first one. And take everything off of it. I'm going to take make sure I have everything off of it and at 8:30. So I'll put my vertical line. 8:30, it'll be right here. This candle is not totally closed yet. It was descending. So here's my pivot high that I'm looking at. Here's the pivot low for the day. So I'm going to be starting my wedge. So if it's descending, I'm going to start my A up here. I would move my B down to the low I'm going to look between of the day. I'm going to start from down here. It's going to be right about in that area. I'm going to move it up to as close to the alert as I can and pull it down. And I'm going to see if these trend lines look like they make sense. I started here. We have a little bit of, you can see where there's a little bit of a hit here. And here's the low or the D. There's the high. Here's our wedge that we have surrounding where the alert was. I'm going to go to the 5-minute chart. And I'm going to make these a little bit tighter if I can. Actually, I can go to the 1 minute. Sometimes the 1 minute is just so far away that I can't hardly catch it. So I'm just going to, sometimes it's a little bit easier just doing initially off the 5-minute. Put that over, go to and we're going to end up with our 1-minute chart. I'm going to slide this over as close as I can. I'm going to slide this over. This looks like that's pretty much the bottom. I do see a little bit of a trend developing with this right in here. This is a secondary. This is not the main indicator, but it's something to at least reference as this thing's moving in and out between the wedge. So this is where we are on a 1-minute chart. I'm going to check all 3 time frames and see where we are as far as strength-wise goes. And I'm seeing like right now on the 15-minute chart, the US dollar is cycling back and forth, being stronger than the Swiss. On my 5-minute chart, this US dollar is still stronger and strong by just by 1 on that one. And it's also, the Swiss is now stronger. So right now we have a little bit of a pullback with basically we're looking at the strength is more to the upside with a little bit of a pullback on the 1-minute chart. I'm going to check my moving averages, which are these. Let me just see. Let me just take these off so we don't confuse everybody. I'll check my moving averages on my 15-minute chart and see where they are. And right now we're looking for a 5, 13, and 62 all in the order. Right now the strength is to the upside. On the 5-minute, I'll put my moving averages up. We have the 5, 13, 62. The strength is to the upside again. So that confirms strength here. This one just flipped back over with a strong pullback. But the moving averages are showing that, right now it's showing that it's bouncing off of this one. So there's going to be a little bit of a resistance there. The strength is still pretty much to the upside, looking to the upside with a pullback. So right now there's nothing to do other than wait and sit on our hands and wait for a confirmation. And ideally, basically what we're doing is we're looking for a break of the upper part of the wedge or the bottom part of the wedge. And we also want to make sure that we have enough room to get enough of a target if it does break. And the let me take this one off here. And my B, which is the extreme, is pretty much where I'm going to be looking for the first target to be. So I'm going to put a little horizontal line there if I can get my tool to work.
Yeah, I really like this one to the upside. Just the overall trend of the market and everything moving up. So I would not want to be shorting this at this time.
But if you want to, but you're looking at the range, if it does break the wedge, I'm looking at, do I have enough room to where I'm going to get a potential bounce off the B, which was this candle right here. Let me see
Is
if
that a
that's
wick
right.
down there? Is that B
What?
anchored to that wick?
Well, so I'm looking to see, oh, it should be over here. There we go. It's basically the same point, but yeah, thank you. Yeah, that didn't, there we go. That's better.
My bottom's a little more flat.
Yeah. So, but if it breaks the D, do I have enough room for 7 pips from that D to my B? And right there, that's about 11, that's 11, 10, 11 pips. So you do have room for it could be a little tight, but it could still work. And if it breaks the C, which is the C part of the wedge, is enough room to the A, because you have a nice little wick right in here. So that would be a little bit of a concern as well. But it'll probably be making some new highs for the day. So this thing could very well go up much higher if it does break the C. And I'm with Matt, I kind of favor it to the upside right now. Although we did just get the flip on the 15-minute to the Swiss to this being the strength.
Yeah, but I'm still comfortable with that. I believe it's going to pull back. It's got to pull back a little bit more before it gets enough gas to go through the previous highs. So, sometimes price needs to breathe a little bit.
And that's one reason why we try not to get too anxious to take trades in the middle of the wedge for that very reason. Because generally should be happening is should be getting a bounce, and a little higher high, little lower highs, higher lows, lower highs, higher lows, breaks, and then retests the wedge and then goes on to wherever other extreme it wants to go to. So I said, this is live. We don't know. We have no idea which way this thing's going other than what our brains are seeing and what our eyes are seeing on this. But if you're looking at the inside of this, the range of this whole DB range, DC range, it's only 14 pips. So this is a really tight wedge. So I'm not going to try and catch the extremes. I'm just going to look for a break, and knowing that if I break, I can get my 7 pips. That's going to be hopefully on the other side of where the wedge is. And you see it's getting tighter and tighter as we go along. So all we can do is right now, all we can do really is just wait and see how this thing plays out. What's nice about these is, I mean, sometimes we get multiple wedge alerts at the same time. If we get another one, we would have some time to be able to rethink this one. But you also see that what I'm also looking at, there's a little bit of a trend going on where we're getting lower highs, and we just have a lower low. So we do have a little bit of a trend developing in this area inside the wedge. And remember I said I like to look for a trend that has a couple hits. Here's 1 hit, here's 2 hits. And if it goes and breaks, right now it's trending down, but if it goes and breaks the top of this, I may be looking to see, it could possibly give us a little bit earlier entry, and it might give us our stop on the other side of the wedge for a little bit better stop ratio to the target.
That's exactly what I was looking at too.
But right now you see that you have 7 pips up from where the price is right now. You have 7 pips to the top. You have 7 pips to the bottom of the wedge, and it's just winding down. It's just winding up. So right now we have a little bit of an internal wedge right in this area right here. You'll probably get some heat if it breaks to the top. And the question is, if it pulls it all the way down here, if you can get in, and let's say it follows us all the way down, this is going to be the area where it's going to be really deciding. It may break, come back, break the top, and then go on up, or it may break the top and then follow this one all the way down. But basically all you're doing is you're looking at a series of trend lines to make a decision if there's enough room to the next point.
While we're
Now,
sitting here in the middle, Al, we've had several people ask about these, what they're seeing on the screen. Guys, as a TradingView user, you get 3 indicators with the free version. So you're not going to find most of these in the public area for TradingView. The FPRP tool that's being hidden right now, that's a proprietary tool. We'll talk more about that later, though. But the MMA, all that is your 5, 13, and 62 moving averages. Well, every time you lay one of those on your screen, that is an indicator being used. So we had a developer create this for us. It's not available yet, but we're working on making that available to you guys. It's MMA. So all the moving averages are one indicator, which is really nice. It saves you a little bit of time. And I'm watching chart too. So Al, if it gets close to doing anything, we'll stop.
I'll let you know.
The MRSI is just, we use 2 RSIs, an 8 period and a 3 period. We had the same developer overlay those 2 into one and then include the whole moving average, which you see those 3 green and red lines below. Those are 3 separate indicators all combined into one. So now we've used 2 out of our 3. And the bottom is RCS. That was developed by a trader of ours who's also a Auvoria Prime user. A friend of ours that created a strength indicator based on 8 pairs that we trade, and it just reflects right now the current, that knowing that the U.S. is the weakest, Swiss is the 3rd strongest. So 3 different indicators, and we will talk. There'll be more about this in the channel on Telegram. That I'll post the link again for the Telegram channel. Right now, we're in negotiations with the developers and Auvoria Prime to figure out how to make it available to you guys. The tool for the triangle is already on the platform, so that's there for you. That's not an indicator. So just be patient with us as we try to iron out the new type of things with this type of situation. So hopefully that helped a little bit.
Thanks, Brian.
And Josh, I'll make sure you do. I see.
Yeah.
He needs to see it, yeah, because he's one of our big dogs. So I'll make sure you get access.
We use the triangle tool to draw our ABCD.
Yeah. Show them where that's at.
This is the one right here.
Yeah.
Yeah, that's this tool, and that's and basically what all that is just a where you have a series of lines. You'll start with an A, find out your peak, your other B, and you draw, and then it gives you a wedge. And I think one thing that's important to know is that all wedges are triangles, but not all triangles are wedges. And what I mean by that is if you have your AB, let's say just make it all this right up there, and you have a situation where it looks a little bit like this, where that's a triangle. That makes for you don't have a lot of, I wouldn't consider that to be a wedge. I'd like to see the wedge being where you have where one side of this triangle is longer than the other side, where you have you have an angle where it looks like a wedge, not a triangle.
Yeah,
and I usually like to see a situation that looks a little bit more like that.
Yeah, to add to what he's saying, I enjoy to, I try my best to have like one side flat, either the top flat or the bottom flat. But also, I don't think we mentioned this, but we're very particular when we're drawing the wedges. We don't have preconceived notions that it's either going to break up to the top side or down to the downside. We don't want that kind of confirmation bias and confusion in our head, right? We'll just react to whatever price is doing.
Exactly. Yeah, we may have an opinion, but we don't have a preconceived, we don't lock our opinion into our heads that, oh, this thing's going to break to the upside or it's going to break to the downside, because usually, well, you have a 50-50 chance of being right or wrong, and that's not very good odds. So you just sort of keep that part of the thought process out of your head and just let the chart tell you what it's going to do. Now, one thing I see here is as I'm looking inside this wedge on the 1 minute chart, I'm looking to see there was a little bit of a rally. It rallied. There was a little area where it was probably it would have had to come back through it and retest it. In other words, there was some, as this strong move came up, there was an area here where there was a battle going on between the buyers and the sellers, and then the buyers took off. Well, a lot of times what will happen is once it comes up and it retests this area in here. Again, this is strictly price action analysis, where you have a little zone right here where the battle was raged. If it raised once before, it's bound to rage again. And it came down. And you see right now, it came down, it broke through that, and now it's coming down. And you see where it broke through this area, came down, just came up and retested it. And now it's heading down to see if it's going to, which gives some validity to this trend line right here, that there is some movement coming down, and you might have another battle. But this is still a higher time frame. So right now, as you can see, it's getting tighter and tighter as this thing keeps following this green line down. Now it just broke through that. It's retesting it. So if this thing comes down, it's probably going to retest it again. If it comes down here, it may come up and retest, and then by that it may actually break, retest it, and give you a head fake. But we're still looking at this is the other part of the wedge. So right now there's still nothing to do, but this is something to note. And we just wait and see.
If you could pull out just a little bit more, just so some people could see the beginning of the wedge, just
sure.
As long as it doesn't take away from the potential entry that we're going to have.
Put it on the 5-minute chart.
Yeah. So that's where we got the top and the bottom.
Actually, this thing needs to go over. I don't know why this thing ended up over here like that. This should be over like this.
It does shift sometimes, though, just from going from different time frames. I've noticed that, but
okay,
it's not a big deal.
And that's why I go down to the 1-minute chart too, and just to make sure that I have all my points as finely tuned. And you can see, like from this B, here is this is really pretty much where the start of this big move was. It came up, and it came down and retested this area. You can see where, and this little candle right here is where it retested it. And then it took off. So I would expect to see some area, if it comes down, this is the area that I would expect to see maybe some, a chance for it. If it does break the wedge, this could very well come down to this area right here. If you measure that, if it breaks here, come down, you've got 12 pips. This is a 12 pip move right here. So you're very likely to get the 7 pips if it breaks, if you have the strength and momentum to bring it down there.
Yeah, that's your daily bread and more.
Yeah.
So that's pretty good.
So I can get, I'm going to be looking, and what I like to do is make some target zones. So if this is the bottom, it came up, retested it right here, then I would be looking at, there may be some other orders that may come in to have a little bit of a problem in this area. Again, I don't know if I take it up, maybe up that high. This might be your 7 pips right here.
On the 1 minute, we've got a to the pip rejection on that trend line. So we're going to see what happens. That bounces the third hit on that 1 minute trend line.
So let me go back to the 1 minute.
Yeah.
So we kind of keep an eye on it. I like to enter the trades on the 1 minute. A lot of times I'll follow them on the 1 minute, but if it goes for a real long time, a lot of times I just move to the 5-minute chart just so it doesn't play with my head so much. You see, it came in here, it tested, it broke it. Now it's retesting. Now it's retesting the wedge, this top green line.
So right now we have 2 of the hulls that are saying, so the 15 and the 1 minute are saying buy, and the 5 minute saying sell. So
again, there's a conflict.
Yeah, a little bit of a conflict. So it's a good reason not to come into the trade at this time.
Sometimes you can take these early entries and get lucky, but sometimes all it does is stop you out and just plays with your head. So you're better off in just waiting for it to let the higher time frame, because actually the wedge was drawn at a 15 minute. Now we're looking at a 1 minute. This is still the more powerful area. This is just the price moving in between that. So you're still better off.
Like a higher low. That's what it looks like right now.
Exactly, it is, and it broke. Here's a high. Here's your low. Here's your high. Right now, if it breaks, this is going to form a higher high. or a
Higher
higher
low.
low, a higher low.
My bad. I got tongue-tied.
It was funny.
Well, yeah, but it's besides the point.
So see, so right now you're having a little bit of a battle between here and here. So again, it's all right around this area.
It really stalled, didn't it?
It did.
It just died. This is painful.
And guys, if you have questions, make sure you use the Q&A or the chat box. Matt and I are both watching both of them.
The Q&A is easier so we don't
Yeah.
lose it.
Yeah.
So please put all your questions, whatever they are. We won't even name the name of the person who puts the question in. We'll just
Unless it's
address
Ruben.
it. Yeah, Ruben.
Ruben deserves a little harassment.
Oh, he does. Yeah.
Ruben's great. I like Ruben. He's
It's
he's my good luck.
2-on-1.
He's my good luck charm.
No, I'm kidding.
It's been really good for my account. He goes, I'm short. I'll go, I'm going long. And I've been consistent for the last few days because of that. I appreciate it, Ruben.
Okay, we did get. I did put alert on that trend line, and I just got the alert.
Yeah, so breaking to the top, guys. Let's see what happens.
That pops up on my screen. I was wondering, I didn't set an alert. I'm not in the middle of a wedge. I'm watching your screen.
So let's look at all the different time frames now and see if there's. What I'm going to do is I'm going to take this wedge off this 15-minute chart because it starts getting. Because I want to be able to see the price action a little bit. So what I'm going to do is I'm going to right-click on the triangle, unsync it with the other charts, and just remove it. And we do the same thing with these as well. Right-click, unsync it, and delete it. This is a pretty strong rejection. Unsync it, delete it, and unsync it.
Oh, that's a big pull.
Yeah, right now. This area is. This could have been the head fake off of this range where it said, okay, everybody said, oh, I'm going to go short now because it broke that, and now they just took everybody's. Now there's good. Everybody was going, oh, okay, we're going to go short. Now they come up and take everybody's stops.
Not financial advice or nothing, but I've already entered. I'm taking a smaller position early. I have a lot of confirmation that it's probably going to go to the upside, but we'll see what happens. Generally, I'm hesitant to take the trade within the middle, but
yeah, Matt, you surprised me.
I know I'm shocking these guys.
Actually, I think I understand why you did it, and I don't. I can't say I would disagree with that.
But we'll see if it comes.
If it comes back and retests, if it breaks through this little area right here, this little shaded area, if it comes back and comes out and then retests and still maintains this bottom green line, that could be a very nice early entry.
But if it does come down and break the bottom of that trend line and doesn't show any strength to the upside anymore, I will take that loss. I'm not holding on to that trade very long.
But right now we have
the key.
Yeah, right now we have the dollar did get stronger to the Swiss, not confirmed on the 5-minute. The dollar is strong to the Swiss on the 1 minute. It's coming in. It broke the wedge back into that zone of confusion. What I'll call the zone of confusion, where the battle rages. So right now, if I were Matt, I'd be looking at this and make sure that it doesn't breach this trend line. If it breaches that, comes down, then you might want to be out because then it might be going lower. Am I right, Matt?
Oh yes, I wouldn't. I'd be a little cautious about it breaking that bottom of that trend line again.
But you're in a very tight range here.
This is tight.
It's very tight. I mean, you're in a 4-pip range.
This is as tight as it gets for the Forex, guys. When you can play with a 4 and 5 pip stop loss, I mean, we're talking something special. And yes, Andrew, that's it's kind of what I'm doing. playing the odds. But it's very strict entry. So if it comes back against me in a certain way, I will take an early exit.
Yeah, so this is something you can kind of do while we're waiting for this thing to make a choice and make a decision here. And let's say we're at that's 94.21. So let's pull it up 2 pips. So it'll be 23 to right about to there. This is pretty much using the same type of entry we would use even if it broke at the top. We wait for it to break a trend line by 2 pips, come back, retest it. And are we strong on the US? US is the first currency of the pair.
Let's see what the higher time frames are saying strength-wise. Let's see. I've got the 30 up. I want to... Yeah, if Brian or Al, Josh has a question there.
Yeah, I'm working with them right now.
Oh, you are? Okay, good.
Yeah.
Got it.
Yeah.
So got a little bit of a pullback here, so let's see what happens.
This could be here's the anchor of this trend line. Here's the anchor. Here's the first test. If this thing can test and then break back up again, that might be your third hit for it to go up stronger. I would also like to see all 3 of these in alignment when it does, if it does break. Which means all 3 of these whole moving averages would be green. That would give you 3 time frames that are all saying the same thing.
Yeah, and you're just stacking your probabilities in your favor, right? We're just trying to up our odds.
And what it's saying is that the 15-minute whole moving average says, yeah, we're still long. The 1 minute says we're long. The 5 minute is the one in the middle is saying, I'm not so sure.
I do like the fact that the 15-minute hull is saying go long. I don't put so much weight on the 1 minute hull moving average. I use it as an exit mechanism. So the hull moving average will generally get you like 77% of the move from top to bottom before flipping. So we'll see what happens here. So it's come back against me a little bit, broken that 1 minute trend line, but I'm not putting so much weight on that 1 minute trend line. My trend line's a little bit different than what you see on Al's. I have mine up a little bit higher.
The trend line?
Just a hair higher. Oh, there we go. So we'll see what happens here.
So right now we're still waiting for this thing to, now it breached this one. Here is the head fake. Now it's still looking like it wants to go, and on the 1 minute, actually on all 3 time frames, it's probably showing that the Swiss is now strong by 3. So right now I'm looking at this thing more to go short than to go long. We have a nice strong move. The Swiss is now stronger. The Swiss is the second currency of the pair. So it's as the Swiss gets stronger, we're looking at it to go short. So right now we're looking at, so I'm going to take all this off. And this is one reason why you sometimes don't want to
play inside the wedge
play inside the wedge.
No. So I am going to take myself out in the next couple seconds here, potentially. You know, I'm just going to see what happens on this candle, and then if it breaks the bottom of the wedge, I'll be out of that trade.
Yeah, and then we may be looking to go, this thing's showing some Let me go and draw this.
That's
Get
a
this drawn out.
significant candle on the 5-minute. That's significant.
Yeah, it is.
So we'll see what happens here.
But you see, it came right down to the wedge and it bounced right off of it.
Well, let's see what happens.
Yeah. Right now, we don't know.
I still believe there's a whole bunch of upward pressure, so we'll see.
Yeah,
I like
so
that rejection at the bottom there
at the
of
wedge,
that wedge. Yeah,
Yeah.
I like that. That's why I stayed in the trade so far, but we'll see what happens.
94.11, so go 94.9 right there. Here's the bottom. We're going to make this a potential entry zone to sell.
Yeah, it could slice through the wedge right now, so we'll see what happens.
Lock it. So, but this was, now if I get into this trade, my stop, I want my stop to be above this whole zone right here. It'd be best. And if we're looking like right now, if we could get into, this is our 7 pips up, 7 pips down of where the price is. So right now, if I got into this trade with this break, my stop would still be all the way up above. Here's our candle down. Everything is looking to see where we are with, it's strong here. Swiss is strong, Swiss is strong.
Swiss got really strong.
I'm looking for this candle to come in, close inside this zone, the entry zone, come back, retest, or if it comes out and breaks through here, retest. If this candle comes all the way down and closes below here, I'm going to try. I would probably take it either here or wait for it to come back into the zone to get into the trade. But right now, this is a nice little basing right here. I would say you start getting your charts set up on your trade platform, on your MT4 platform. Right now, I'm looking at this thing's lining up to go short.
Hey, Ruben, did you take that long or short, or are you still waiting for the entry? What's going on? All right, I'm out of this one.
Nice big move down. Just retesting our zone. Everything is still showing that the Swiss has the strength on all 3 time frames. And this candle closed, I'm going to wait for it to come back into the zone and I'll take the trade. If it doesn't go back into the zone, then I probably will not take the trade.
Yeah, it's got a lot of steam on the downside. Let's see what happens.
Here's a blue candle. Right now, let's say doji, which means the buyers and sellers are just sitting there looking at each other. All 3 of my whole moving averages are all red on all 3 on both time frames. I'm not sure why it's not on the red on the 15 right there.
Yeah, that's a little odd. Maybe we'll have to reload that indicator. But very often, guys, what happens is when it breaks through the wedge, it'll come back up and it'll tag the bottom of the wedge to the pip on the lower time frames.
The minute this blue candle turns red, I will be in, and I'm going to be taking this. Right now, I see that these are all pointing up. As soon as if I get a hook on this blue, on any of the blue ones or the orange ones, I will be in this trade. Right now, I'm looking to enter with I could set up a sell stop right here, or there's a red candle. I'm going to be in the trade. I'm in with 1 position. I'm looking for it to come back down, break through that, and I may take my 2nd position at that point. Yeah, a little bit of a basing just before it broke the wedge. It came back down. This is a nice big candle. My stop could almost be up here at the top. Your early stop would be right up in here. Why am I getting a hard time getting these in? I'll mark this as a stop zone. And again, we don't know what's going to happen. We all can do is play the odds. Stop zone there. So right now we have the top of the wedge, the orange one. We have another one. It came up here, tagged that.
Yeah.
And remember, looking for this area right down here as a target, as a potential target, because from our 15-minute chart, remember we were seeing that there was a little zone over here.
Sorry, Ruben, that you you took that one. Anyone that took that one, you know, it was a gamble, so I only used a very, very small position. It wasn't a high probability trade to enter that early.
So now we're going to be looking here to see where our zones are to see if there's a Fibonacci zone there that we want to be looking at. Here's our target right down here. I'm going to be looking at this as a target. And if we gauge our 7 pips, let me see, we're going to go short. And we got in right about in this area, and we're going to make this our default, which is 7 pips. And if you got in right at the wedge, your 7 pips is going to be right below this blue line right in here. Right now, you're well above the 1 minute 13 moving average. Let's go over to the 5-minute chart since we're in this trade. And we're going to see how this thing plays out. Again, remember, this is our one target zone right in here, this area right in here. It's just a little bit above the bottom of our 7 pip area. So kind of like if it can break the bottom of that, it could very well retest this area, this whole area down in here. Everything's still red there. Everything's still pointing down. The orange one hasn't gotten to the 11 mark yet.
If you guys took this trade, put a Y in the chat box. I want to see how many people actually are in demo or live. Doesn't matter. If you're in this trade somewhat. 1, 2, 3, 4. Okay, so we got over half. Good. So at least we have at least half of us actually digging in a little bit on it.
I'm going to put this on a 2-minute.
Very cool. Thank you.
So we see where our zones are. Here's the 2-minute red line right here. Here's our green. This should be our 7 pip range. Here's our blue. This is where the whole thing broke right up in here. There's the blue. Remember, a lot of times we like to go blue to blue. So all this thing happened right here, this blue area. Here's the first 7 pips. Here's the next 7 pips. Here's the next. This will be 21. So it'll be 7 to the red, 7 more to the green, 7 more to the blue. That would be a 21 pip move if it can get down that. Right now, I'm looking. This could possibly break, stall right into this area, and be coming back up, giving anybody another chance to get in or hold the ground.
Remember, 5-minute. Some people use a 5-minute chart for an entry, and this is coming right to that too, as well.
Yep.
There's no rush.
The 5-minute entry is really good for someone that's not used to entering on 1 minute. So
my actual entry with the spread and everything else was at 08. So my actual entry is right there.
yeah, I've got one at 08 and I got one at 05.
I pulled the trigger up here, but my fill was down here because of the spread.
Mine's 08 and 06. And
Oh,
our
look at that.
final position if it comes in on the 5-minute and tags that wedge.
And I'm looking at this 94.15 area as a potential to be looking to get out of it if it comes back into the wedge. But right now, this 13 is being respected. Let's go over to the 5-minute chart. Let me spread this out a little bit.
So funny. I'm trading on such a small account. Woo! I got 20 cents.
Oh, really?
Yeah, I'm 10 cents right now. Just crazy.
But the thing is, that
You get
20
excited
cents
about that's crazy.
Well, but here's the interesting part.
This?
That 20 cents in demo will buy more than a $200 demo.
Lost. Yeah, I love watching positive numbers. It's hilarious.
But one thing about when you're trading live with really small numbers, it's you're risking maybe that cup of coffee at Starbucks.
Yeah, and if you're newer, you don't need to be playing with big money, because you need to be patient with yourself, because it's gonna take time to, number one, learn how to be profitable. It took me 2 years, 2 years of lots of pushing and lots of time. But what we're trying to do here is trying to accelerate that learning curve, so you don't have to spend 2 years of your life trying to learn this skill that can put bread on the table for the rest of your life.
Or 20 years.
Yes, or 20 years in certain cases.
So right now we just need to be patient. We're just looking to make sure that we have some protection here. We're trying to reach our target, but we also have our stop and play too. So let's keep all that in mind.
Hey, so while we're talking about this, but your goal as a Forex trader is not to make money. Your actual goal is to end the day with the same amount of money that you had at the beginning of the day, or make money. And if you've done that, then that is a successful day in my books, because the vast majority of people that trade the Forex are not able to do that.
That's truth. I would like for it to touch the wedge, to be honest.
Well, I'm not of that mind, but here's our stop zone. So basically, if it comes back up into this area, I'm still going to hold tight. I expect it to respect the top of this red candle, and expect it to, or I anticipate that it will respect this yellow 13 moving average. All three of the moving averages are in the right direction. The 62 is above the 13, 13 is above the 5. And so right now it's just have to give it room to breathe.
Yeah, the hull on the 15 and the 5 say that it's going short. So I'm liking that as well.
And actually, if you look at this little area that we had, I can see we had a drop, and it had a little bit of they can almost even pull this down here to the bottom of this, and the top of this blue range here. That was basically where it was, the battle raged. And so right now, I would like to see I'd like my stop to be above this whole zone in here. Or if it gets into that zone, I'm not going to panic. If it comes up to the bottom, I would still be in the trade until it breaks the top of it. That should not be a factor. If everything's going well, that should not be a factor. Why is this thing over like that?
So much fun. I gotta get it boring though.
Yeah. All right, here we go. Let's see what happens. My voice is failing, so I apologize for that. It might be to your advantage. You might enjoy that.
I just held my tongue. I wanted to say something just to give you a hard time. I'm not far.
Yeah.
My allergies are bad as well.
Yeah, no, me it's just raspy.
Texas heat and allergies.
Yeah, well, Canada heat right now. It's actually like 33 degrees outside Celsius. So yesterday it felt like 110 degrees Fahrenheit in your car. That's how hot it was. It was really hot here, so it was nice.
That's strange because that's what it is outside, not in our cars here.
Yeah,
Correct. Well, welcome to July.
yeah, it's not as bad as what it was like in the Philippines. I was there last year because my wife's from the Philippines, and we spent a month there. And I'm telling you, it was hot. Like,
And they're humid there too,
oh, it.
like Houston.
You'd take a shower and you'd go outside the house for like 2 minutes and you'd feel dirty again because it was
Yeah,
so
you
hot.
stay wet. You just stay wet.
Yeah. Not as hot as the Sahara Desert though. Like where I was at in West Africa for a while. We got out of the bus one time and people almost passed out because it was so hot.
But it's a dry heat.
That's very different. Yeah, it's very different.
Yeah, but I don't care. Hot's hot. I don't care if it's dry or wet.
Let's see what happens here. I like how all of our moving averages are in the right direction. That's a very good sign that momentum has shifted. So the 62 is the center of the road in the Forex, especially on the 30-minute. So I don't even think we went and looked at the 30-minute 62 and see kind of. Oh, it did?
It's bouncing off of it right now.
It's bouncing off the
fighting,
30-minute 62.
it's fighting right at it.
Oh, that's not great then.
Well, it's gone below it, and it's just hanging right there at it, and it's waiting
Yeah.
for, it just looks like it's forming another wedge.
It
really
definitely
does.
could.
Definitely I'm going to see it right here. If you were to be looking at this, I mean, this is really tight on the 1 minute, but looking at up here.
But all our whole moving averages are still, well, except for the 1 minute, obviously. Come on, baby. Do your thing.
I'm just going to move the A up to the top of this one up.
Now, for those who are you on the 1 minute, Al? Are you showing that? Is that 1 minute?
Yeah, this is 5 minute right now.
Okay, you're 5 minute. If you look at just above the wedge on a 1 minute, one of the things that we've learned, and we'll talk about this from time to time. Again, we're talking about orders. You know, the market. Back when I was doing banking, we didn't look at charts and things like that. We looked at price. But any long, strong move is usually somebody with a little bit more money, and they're making the move happen. So on the 1 minute, you'll see a basing right above our wedge. It's called a drop basin drop. You'll hear us talk about it quite a bit, Al and I.
This is the low area right here.
Yeah, and so
there's one actually right above the wedge. Here's another basin right here.
the one above the wedge I was looking at. Now the
This
one
one-
right
this one
below
right-
is the one we're fighting with. I was kind of hoping to get up into the one above the wedge. It may not happen, but we're looking for those basing areas because that is an area of imbalance, price imbalance. Nobody's in charge, and then it breaks away. So I see
Yes.
two of them.
You can see this has a little bit of a descending factor here where the A is right at the top of where this basing was. The C came right up to it.
Excuse me.
That would have been right in line, came right up to it, and now it's basically following this trend right in here.
Agree.
All right, so we're going to get a nice little pullback, and let's see what
Just going to tuck this in right in there like that.
what goes on.
But we're still it's still respecting this main wedge, which is above this entry zone. Let me make this orange just so you can kind of see this a little bit clearer what we're looking for here.
We only have about 15 more minutes. Is that right, Al?
Before we take a break, and we get another wedge alert.
No, yeah, that was yesterday. For those who were not here yesterday, that was crazy. If you missed yesterday, we literally tried to take 2 breaks during our time, and every time we call a break, literally within 10 seconds,
20 seconds, 10 seconds, yeah.
an alert came. So we never got a break yesterday, but today we have Catalina. Catalina's at 10, so we want to make sure we give her plenty of room in the room to be able to get in the room as well. So
Absolutely.
Hopefully we'll get this one closed out before that happens.
Yeah, it could finish up right here. We'll see what happens.
normally, guys, on Fridays we can go as long as we want because no other instructors are needing the Zoom room. And I'm going to go ahead, and while this is still doing its thing, I'm going to go ahead and Bill Wynn created a nice little Telegram channel for us to provide you some information as we go through. And I'm going to make sure I get that link into the chat box again for you guys.
You know what? Maybe we could just put a nice done up screenshot of the trades that we've taken in that day for sure.
That's kind of what I started with that. Put one up to see if it worked from yesterday, and that's kind of what we're looking at. So you can see the wedge drawn out, and those who might have missed can still see it. That link is now in the chat box. Feel free to join that Telegram. And
see
then,
how excuse me, Ryan. Do you see how how we drew? This was a hand drawn. This was not a wedge alert. But you see how we had a little trend going up. We had a hit. It came down. It broke it, and you see this red candle. It just went right up to the top of that before it's starting to break down again.
Hey, now we're talking. Let's go.
And now this removes any hope of me adding, because if it goes back up into our entry zone, it's probably changed the trend. So I'm really going to take that.
We also see now where it's got to get through this B area, and it came right to the B. It bounced, but it's still below all of our moving averages, and so the yellow moving average is still being respected. All of our holes are still red. The strength is still to the favor of the Swiss, and now it's coming down to probably retest this zone right in here. If it gets anywhere near that yellow line and stalls, I will be out of this trade.
Yep, likewise. We're not looking for a big move on this one. We're just looking for a piece of it. So,
Where's your stop line out, Al?
My stop zone is up here at
No, your target. I'm sorry, I misspoke.
oh, target. That's 9402.
Okay. Just gonna mark it on my chart so I can see it too.
And actually, our green fib line is right here at 94.
Even.
Yep.
Yeah. Of course it is.
Actually, I like 9403 a little bit better than 9402 for some reasons. It's a fib number.
And guys, each day we'll go a little bit deeper into these tools and answering your questions. Don't think that you have to learn it all in one day, because that's not. You'll see the magic of the fib. We haven't had to need it, really use it today as much, but you will start seeing, especially when things start drying out. When we have those quiet moments and we're not in a trade, we're going to show you the magic of those fib numbers.
Yeah,
and we'll show you position sizing as well, and how you and the power of using tight stop losses, and why that is where most of the money is made in the Forex. It's not in the big stop losses, because we like to load our trades with as much, that our pip value as high as we can with the same amount of risk as someone that's using a 70 pip stop loss. That's where the game changer is.
Yeah,
right.
Josh, to answer your question, basically my actual filled entry was at 9408. When I was looking at the candles, I actually took the trade when it was at 9409. My fill was at 9408, and so the 9402 would be basically, at that point, it'd be 6 pips below my entry.
really taking its time here, isn't it?
Yeah, it is.
This almost makes me feel like it wants to come up real hard, like like I originally thought it was going to, until it came against me like 15 pips.
On average, over several hundred trades that Al has taken, the average length of the trade is anywhere from 20 to 30 minutes. So just understand that's normally the length. However, we had yesterday one that hit, within, 5 minutes.
Yeah.
Yeah.
The Euro USD, right?
Yeah. That was
We closed the room down, and about 5 minutes later, it went about 12, 15 pips within about 2 minutes after we closed the room.
So yesterday was an amazing day. We tried to take 2 breaks and couldn't do that. And as soon as we were done with our session, the trade took. And so you couldn't see it actually happen. Most of you guys were in it already, so that was cool.
There's a little battle going on right here. It's starting to pick up a little steam. A little more activity. There must have been something that just actually right now we're 4 minutes away from the U.S. market to be opening. So if we're not out of this trade by the time 9:30 comes, we may want to widen our stops just a little bit in case if there's any undue volatility with the U.S. market open.
Andrew, that's a loaded question. Andrew's asking, when would it be okay to go to break even? From my back testing, I'm not trying to tell you what to do. I don't move my stop in my mind. Not unless I'm profitable. I mean, and really, you're only talking 7 pips. So if you're doing things right, you should not be worried about moving your stop to. Now, if you're going for that longer move, you're going to the 12 pips plus, then I would consider doing a move of a stop.
Yeah, if you're going to go for the big run, then protect your profits to where at least you get out of one position and move break even on the second position if you're going to let it run. Worst case scenario is you only get the value of the one position if you get stopped out of break even.
Closing on the other side of the 30-minute 62, the 5-minute candle. So we'll see what happens.
If we can get a close below where my cursor is right now, if we can get a close below there, we'll be in good shape. We still have 30 seconds to go. And also a couple minutes before the U.S. market opens.
Rejected again. Look at that thing.
But it did, according to my chart, it did dig down just a tad bit lower.
My eyes are not that good.
I'm seeing it right at the B level. The wick is right at the B level.
Ah.
This will be a very interesting candle.
Yeah, we got 2 minutes until we got the 30-minute candle, the 1 hour candle, the 15, the 5-minute candle. All those are going to close at once. So we're going to get a big move, whatever happens. Probably 2 more candles, we'll know what's going on. The hulls, hulls say we're still going down for a bit, so that's what I like there. What's our?
This is what I like about this tool, that I can draw subsequent trend lines as this thing's moving around.
We needed that one to go down.
If this market opens, if this thing goes and breaks the top of this CD leg, then I'll just close it out and wait for the market to settle down.
Yeah, because by then we're gonna have to cut it early.
Mm-hmm. And then there was silence.
Yep.
What's your strength meter on the 15 by chance? RCS?
Mine's on a 2 and a 0 in favor of the Swiss.
Okay.
That could flip pretty quickly as soon as the market opens, though.
It can.
Big money dogs are gonna drop their money and
But this thing could tank 15 pips from here too when the market opens.
It's certainly good. It's certainly good.
Look at the RCS on the blue RCSs now. All these RCSs are they came in the 50, but now they're just breaking out the bottom. So we're looking for this thing to weaken a little bit.
Sometimes I wish I could just speed up time just a little bit, just
That's why you do the replay, so you can speed it up.
Yeah.
Yeah. Didn't mean it that way.
And you got Cher who wants to turn back time.
Yeah.
I'm not singing the song though. I'm not gonna do
Please
it.
don't. Not in the mood.
If I wear her outfit that she did the video in, then I would sing the song.
I think I'd be scarred for life.
Ooh,
I don't know. I'd have
we're almost there.
There we go.
I'd have to
Market
reevaluate
is
our
now
friendship.
open. Market is now open. See if it came right to our yellow line.
Got too long.
I'm gonna close out one position.
Yeah, better to have pips in the bank than let it erode, right? That's why we got 2 positions open.
I took one off. 6 pips. Well, 5.7, whatever that is.
All right, so now let's go down.
It goes down to that green line. We'll see how it handles that.
That second one down there.
Yeah, the FRP
Yeah, look at that
green.
thing.
It still has some. Right now, the Swiss is getting stronger to the U.S. on the 15. That's a good thing for us.
Good. Whole across the board are red.
Now we see see how this blue one came down to the 89 and hooked.
Yeah, Christine. Now you're singing the song.
See how it's still respecting that 13 moving average, that yellow moving average, and which is also inside that CD trend line.
Ruben, I will. I'll check it out. I'll send you one of our music videos too. Back when I was touring.
I accidentally switched my charts to USDJPY, and I saw a big move down. I was wondering what was happening.
You got excited, yeah.
Yeah, that happens sometimes.
So right now, I'm just going to let the second position go until it breaks that CD line, and then I'll make a decision if I want to hang on to it or not.
It's so cool to know that we're all doing this in a live market.
Yeah.
You can't fake live.
There's no fake. Yeah, exactly. There's no fake here. There's no talk about, oh, this is potentially what can happen, or this is what's gonna. It's like, hey guys, we're just stacking the odds in our favor and letting it run.
Just doesn't want to seem to chew down below there.
No, it doesn't. And I don't like that rejection. We'll see what happens. Come down a little bit more.
We're going to give it 2 more minutes, guys, and then we're going to have to shut the room down. Make sure you go through the chat box, get your Telegram. On the schedule, guys, just so you guys know, Monday we start at the same time. We do this every day. I will post a picture of our schedule also in the Telegram for you guys. That way you can come in and get what you need for your education for the day. Stay as long as you want. That's the cool part. If you're allowed to stay and your job doesn't hinder you, stay as long as you want, or just get the nuggets that you want. And remember, the first part of our session is normally going to be based around basics. And then we, as the day goes on and a longer time when we have with you guys, we'll go into more of the advanced stuff and really dig into some of these tools that we're using and why and what they do for us. All right, Al, I hate to do
Okay.
this.
All right, we got to say goodbye.
You guys been great. Have a great weekend. Thank you for coming in. We will see you guys next Monday. Have a great week.
All right, take care, guys.
Good night. Or good day, everybody. Good night.
Thanks.
See you guys.